Hello, everyone, and thank you so much for joining us for this session. Thanks for hosting another one like this. I know it seems like an eternity since the last one we did back in April, was it? Anyway, I'm Jen Viechner. I'm a senior writer at Fortune. I cover finance and fintech, and I'm really excited to be joined by Catherine Petralia of Cabbage. She's the president and co-founder, and Sudhir Madani is the CEO and co-founder of Fat Merchant, as well as Levi King, who's the CEO and co-founder of Nav. So yeah, thanks again, everyone, for being here. I would love to start with Catherine, because I know you the best of the three of you, but we also had a really interesting conversation back, gosh, it must have been March or April, right at the beginning of the Paycheck Protection Program, or PPP lending. And at the time, Cabbage was sort of considering its role in that. There was a lot of uncertainty about, fintechs and how they were going to be even able to participate in this program. And from, by all accounts, what I've heard, you guys were really able to scale up very quickly and very robustly, which was a bit of a pivot for you. I mean, you've been expanding into different products for Cabbage, but from what I understand, you had in some ways a little bit de-emphasized the lending part of Cabbage, and this was kind of a you leaned in a big way to this, if I'm describing it correctly. But I'd love to hear from you, sort of what that transition was like, and how much has evolved from the beginning of that back in April to where we are now.
Sure, thank you for asking about that. And a great way to describe what we did. We certainly expanded our lending product to include a small business administration type loan, something we'd never done before. We'd never used the tax documents that were required for PPP. So we basically, I keep calling it the PPP machine, but in a matter of a couple of weeks, we built a new platform and system that could accommodate a PPP loan. And so we are really proud of the fact that we're the third largest PPP lender by number of loans. We've been able to provide and have approved more than $5 billion in PPP loans. And so we're excited about the number of customers we're able to serve and the number of jobs we were able to save. But it was definitely a Herculean effort by our team to that side of our system to enable processing a PPP loan.
Yeah. And you're still lending today, and still the program has been extended to August. And so I guess do you see staying in that business the way you have, or how has the PPP program and your participation changed your outlook in terms of how you do small business lending?
Well, I think what we've realized is as long as small businesses have access to programs like PPP or other future, which we're going to talk about, but other future programs that may happen, or extensions or expansions of these programs, it makes sense for us to stay in it because our automation allows us to serve the smallest of small businesses. Our median PPP loan amount was $13,500, which is a very small loan. And these are serving very small businesses that frankly didn't have another place to turn. They wouldn't have had a PPP loan at all, but for folks like Cabbage. And there are others who were doing it too for the small businesses. PayPal and Square were also participating, and they had smaller loan amounts as well. So I think it allowed the light to shine on fintechs as, the folks who can democratize access to products and services and programs that have historically been reserved for the largest businesses.
Yeah. Cabbage also is in the payment processing business as well. How do you, I guess going forward, how do you split in terms of the resources that you have? Where do you see, are they split evenly, or, which products are you going to prioritize in parts of your business going forward?
We actually have a suite of products. Some of them we were planning to launch in the spring, and for obvious reasons, we did not. We are announcing one next week that we're very excited about, so stay tuned for that. But from our perspective, we have teams dedicated to each of these product teams for PPP, teams for our core lending business, teams for payments and invoices, and teams for the couple of other products that we haven't announced yet. So we're running the business just the way we always have. We just now have a team called PPP, where everybody was we thought the program was going to end, and then they cranked it back up again, and everybody's like, okay, we're doing this for a little bit longer, but people are excited about the opportunity that it presents for the business.
Awesome, thanks. Yeah, I just want to welcome, I see a few more people have joined us, so I want to welcome everyone again to this chat where we're talking about reopening Main Street. So we're talking a little bit about PPP loans, but also moving past that. And I want to get into a little bit of Sumira's business as well. And Catherine, we'll come back to you. I mean, all three of you, what's common is that you all serve small businesses. And Samira, you focus on the payment processing side. Called yourself, so it's the Netflix of credit card processing, which I love. Tell us a little bit about, what you're seeing in terms of how consumer behavior has changed from the pandemic and how that's impacted your business.
Yeah, so I think, right off the bat, so we serve small businesses every day. Our customers are actually mid-market SMBs, so they're not the some of the smaller merchants that Catherine was talking about. Our customers are doing about $500,000 in payment volume, so they're a little bit in that mid-tier. They're not enterprise customers either, so we really serve that customer that minimum they're doing 100,000 in payments to 20 million in payments. So that's kind of my sweet spot for payments. But as soon as obviously COVID and the pandemic happened, we saw just a complete decline in payment volumes. So that's the first thing that happened. We had the shutdown, everything declined. But declined in payment volume. But what was really interesting wasn't just the fact that there was obviously a recession, everything stopped. But even as things reopened, businesses weren't able to even accept payments. They didn't have ways to accept virtual payments. So as consumers, we went completely online. And so we saw businesses in technology, we saw businesses in e-commerce really start to skyrocket and boom. And then there was definitely several industry types that took a massive hit, and payment volumes are still nowhere where they need to be based on several industry types. But what we found was that businesses that were able to go virtual quickly were still able to adapt to this new norm. And that we as consumers, our behavior has completely changed. I mean, when I look at my parents, and they probably never done a payment off of their phone ever before the pandemic, and now my mom's ordering groceries from Instacart. I mean, that was a huge shift for us as consumers, and we saw adoption of technology and contactless. And when I say contactless, I mean just virtual payments really rise. And so I think that as fintechs, this is where our innovation hat went off at Fat Merchant. It really wasn't around what can we do today for a payment volume? It's how can we help these small businesses be able to go virtual instantly? And so without massive technology, without having crazy developers on their team, what can we instantly do? And our platform, Omni, we launched a product called Contactless by Omni. It actually launched a couple of weeks ago, where we're able to turn our businesses completely virtual, offering products like text to pay, one-click shopping cart, because now it used to be where, hey, if you should be taking up payments in a multitude of ways. It's you have more ways to reach your consumer. You're going to do more in business if you have multiple payment methods. Now it's if you don't have multiple payment methods, you will die. You won't be able to accept a transaction. And even when things reopened, we found that over 27% of businesses during the pandemic didn't even have a way to take a payment because their stores were shut down. And so I think that consumer behavior has definitely changed. We want mobile services. We want to be obviously in safe environments and be able to take payments with the ease of our phones and online. And so I think we're going to see more and more of that behavior, and businesses need to be able to adapt. And I think there's a huge opportunity for fintechs as we have an opportunity to really take that market.
Yeah, I'd love to hear more about that, because I think you're right. You're pointing out their consumer appetite, consumer behavior has changed in a way where they're really ready to order online. I mean, whether it's my parents or, all sorts of people who haven't been used to, ordering their dinner online or ordering their coffee, whatever, now are. But it's interesting. I'm also seeing a lot of some businesses have a bit of resistance to changing that model, especially some of these small mom and pop shops. I'll give you an example. Right now, I'm in a small town in Massachusetts, and there's a really, really busy coffee shop. It's the only one in town. And they said they tried out every, virtual ordering platform, and ultimately just decided to not do any online ordering and just let people order at the window, because they weren't sure how they were going to be able to handle that. If 70 people ordered lattes on a Sunday morning all at once. That's literally what they said. How do you get over that obstacle or that hurdle, kind of the small business resistance to converting online, or what new tools are available that make that easier?
Yeah, no, absolutely. And I think that it's really easy for us to even think of every food and beverage analogy too, right? Because we are consumers of that. And Uber Eats and a lot of the ordering services and point of sales have done a really great job with taking these businesses virtual. But I think it goes even beyond just our food and coffee consumption. Even let's say services that like let's take the pool care guy, our pool retail store. We still have to clean our pools. And so that retailer now needs to have a method, that can be safe. And I think the reason why they're not adapting to it is because this is new, and it's new for them. It's new for the customer, and that the technology needs to be like as simple as possible. And I don't think that that's where the gap is right now. There might be really great products, but they're still complicated for the small business. And so we have to make it super, super easy for the small business. And so when I give that pool care store example, a simple product like text to pay can change their life. Like truly, I can go onto my phone and say, okay, hey, Mr. Poolman, I want to order 5 buckets of chlorine. I don't know how to clean a pool, but I'm going to assume that it's going to need some chlorine. I'm going to order 5 buckets of chlorine. He could text me my invoice. I could pay directly and let them know, hey, I'm outside and this is my car driver's license, and communicate with the business, and then they can bring it out. So I think that there probably is some resistance, as there always has been for SMB, right? SMB is like, they're not very quick technology adopters, but I don't think that it's been simple enough for them to do so. So I think this is our chance to really step up and really simplify and make payments in a connected omni-channel way, which we've always talked about, but really making it super seamless for them, making it super easy for them so that they are adapting, because consumers are adapting, and we are going to switch behavior. So even for your coffee shop example, if there is another competitive coffee shop that is, and it's easier for you to, place your latte order on your phone and have it ready when you're going to go pick it up, you may switch your purchasing pattern based on ease of pickup or safety. And so we're starting to change the places that we shop and how we get our services delivered and rendered. And so I think that businesses will have to adopt. And I think the players that come out with those options for them that are connected, easy, seamless, will be the ones to thrive.
Yeah, great. Thank you. Levi, I want to come to you now and talk a little bit about what you're doing at Nav, where you have a number of different products, and you, it's all for small businesses, as you put it. You're the Credit Karma for small business. You connect businesses with various financing or loans providers. And so I want to talk to you a little bit about, what you've seen during the pandemic and sort of how that's evolved. I mean, in one respect, there's a huge, I think, appetite for capital, as we saw with the PPP lending program. I don't know exactly how much you were involved with that, but I'd love to hear about that, as well as, kind of on the flip side, I think we saw a lot lower demand for, and you should correct me if I'm wrong, lower demand for business credit cards and business spending. Speaking from experience, I know a lot of companies really clamp down on them. If you're not traveling and you're at home, what expenses do you even have? So how did your business shift, or what different trends did you see as this all began, and what's happened since?
You bet. So we've always been an aggregator of financing options, whether small business cards or small business loans. But we help the small business owners understand their data, their personal credit, their business credit, their cash flows, whether that's the checking account data that we pull in or the point of sale data through our partnership with Fiserv. And we just robo-advise around that data and then use that real-time data that we refresh for the most part daily to make recommendations for a better business credit card or a better business loan, et cetera. So the demand didn't go away. What went away was the supply. So within literally weeks, most non-bank lenders either pulled back severely or entirely from lending, as it was a wise decision. And most of the major FIs either stopped or pulled back big time as well on business credit cards, though I feel like they weren't as forthright with the public and customers to the extent that was happening. I feel like lenders like Cabbage were pretty forthright with their customers to say, hey, here's what's going on. And I will agree with something Catherine said, which is that I think this was a special moment for fintechs, in that before the great fintech story, there was this massive story of failure with the banks. And it wasn't until the second round of PPP that lenders like Cabbage or Square, PayPal were able to offer PPP loans, and then did 1,000 times better than the banks had been doing. And so I think that's going to stick. I think that impression will stick on consumers and on the ecosystem as a whole. But our view into small business is a little bit different than Catherine and Sanira, in that our value proposition resonates with all small business, regardless of size, industry, geography. And so think of the wide swath of small businesses that don't process payments because they're a factory or they're a construction company, where 0 to 10% of all of their revenues do they process. The rest comes good old fashioned check or cash or whatever, usually checks. And so in that whole swath of small business, because we have this view into the cash flow, it's interesting the difference between our view into checking account data versus point of sale data, where point of sale data, of course, every business that relies on walk-in customers has been severely impacted or moderately impacted through COVID, whereas this other swath of small businesses has been a lot less impacted by COVID because they don't rely on folks walking.
Did we lose him?
We've seen insane customer.
You cut out for a second, so if you can just repeat what you said in the last 30 seconds, that'd be great.
Oh, I'm sorry. So I mentioned that we have this view into this large swath of small business USA that does not process credit cards or very much credit card volume. They receive these through checks, and that part of small business America has done a lot better. And the interesting things we've seen in our business, one is insane organic customer growth. Two is the engagement in our robo-advising platform is at historic levels, not just with new cohorts of customers, but previous cohorts of customers. And then we have 98% of our customers historically don't pay us anything. It's a free product for the robo-advising on the personal credit, business credit, the cash flow data, and then you can upgrade for a few bells and whistles that give you deeper insights. And that's been a historically growing 30% year-over-year business, and now it's exceeding 100% year-over-year growth, which is a little counterintuitive because you think most small businesses right now are pinching pennies, but it just shows their data matters more than ever. And in particular, those that rely on vendors and more traditional vendors and creditors. You know, we talk a lot in fintech about the trillion or so in small business lending in the U.S. By banks and non-bank lenders, but there's another $4 to $5 trillion that is lent by big businesses to small businesses directly for credit to shop with them, right? FedEx, Home Depot, Staples, and that world relies largely on your business credit, and so it's been interesting to see the surge in interest in that type of data from our customers. Whereas historically, like if you get a loan with Cabbage, that type of data just didn't matter as much. It was really all about your cash flows. So I think we're going to see a few permanent changes. One, I think, is that small business owners, like the percentage of our customers that I would call like a data nerd, like they're actually trying to improve their data, has been lower. It's like, I want my pain pills, I don't want my vitamins. And we're seeing a lot more of our customers that want vitamins now. Our involvement with PPP was just, we decided quickly, like, let's not try to make money off this. I mean, it'd be nice to make money, but we recommended our customers go to their bank. We referred them anywhere they could get a PPP loan later. We sent a lot to Cabbage. It was a great partner for us. And so we did help facilitate quite a bit. Similar to Cabbage, we spent a couple miserable weeks digitizing the process as much as possible to make it easier for our customers and our partners. And we saw a tremendous amount of success from our customers in getting PPP loans. But have never been a balance sheet or direct lender, and so we did not issue any loans. And so I think the other thing that I think will permanently change is a loan has always been a way to sell your future receivables in theory. And then MCA products came out where you actually were selling your future receivables contractually. And I think this will be the tipping point of making that a wide adoption, great way to fund your business, where it's been viewed, oh, is it expensive? Is this normal? Even as far as now, so many small businesses that historically never sold future receivables by way of gift cards, right? There's been an explosion in that business. It's the same thing. You're selling your future, you're taking money in today and selling your future receivables. And I think that this will be the tipping point to really make that that conceptually, that type of lending here to stay, and whether it's through gift cards or whether it's through lenders like Cabbage. But I think that's a good thing. I think that's been kind of a blocker for small business owners. They tend to be a little old school to say, like, I don't know, is that like what, a daily repayment? That doesn't sound normal. It is. Like, you transact daily, you bring in money daily, so why wouldn't it be normal to pay your creditors daily? And so I think that'll be a positive thing for small business that's here to stay. So our positive changes, we think maybe a higher percentage of small business owners will be more data nerds and really stay on top of their data, and think just more broadly and be more open-minded, kind of like Sunir was saying, to say, I've got to do things differently. What's worked for 10 years isn't going to work for the next 10 years. The past 3 years is not going to be predictive of the next 3 years. And I think this is all brutal time for small business, but I think the ones that survive will be stronger than ever. And I think we'll see a resurgence post-COVID, and a lot of lessons that will be learned forever.
Yeah. When you talk about, kind of that, the data aspect of it and the importance of having, clean data, is that also a reflection of, greater automation in lending? That was one thing that I heard, as I'm reporting on the PPP, was that, one kind of hiccup that a lot of small businesses ran into was, if they're submitting, to a fintech platform, they're submitting their data and their forms, and if there's a typo or it's in a different, format for some reason, then it may trip up the automation of it. Do you see, kind of as we're getting more automation, this is kind of going to be, it's going to be all the more important. I guess you see it as a reflection of greater automation in lending, or how do you see, that trend affecting your business?
I definitely think that will be a theme that's here to stay. Again, it's just fun to use Cabbage as an example because we've partnered with them so long, and I know Catherine for so long, but it was really innovative to tap into data sets like the cash flows to say, okay, the cash flows, they're an ultimate truth teller. They are telling the truth of what's happening right now, and there's full data integrity because you're getting it straight from the source. Whereas credit data, there's lots of flaws, both in business credit, personal credit, and it is more of a rearward looking view, and it's not nearly as real time. Long before you start to get late payments in your credit, your cash starts to dry up, either as a consumer or a small business. And so that's where there's always been high data integrity, where Cabbage or some other lender ties into the checking account. Like, it is a truth teller. It's happening or it isn't happening, or the merchant processing. And you could call that fully automated in the sense of data gathering. That the customer went through KYCs to be able to open that account. There's just so many reasons why there's high data integrity, regardless of how sloppy the business owner is with their P&L and their personal credit and their business credit. And I think that lenders will need to find ways to go beyond that. So a good example is lots of small business lenders don't require a personal guarantee. So they're just looking at, can the business pay this loan back? And that view's been pretty reliable pre-COVID. Well, now, you probably ought to consider, if you're a lender that maybe wasn't looking into them as a consumer, you may want to look and go, can they float this business for 3 months personally if revenues go to zero? Like, we never predicted a scenario where in a recession, small business owners would go to zero. Like, in every other recession, it's like you get hit by 5 to 30% of revenues go away, you adjust. So now what can keep you alive is maybe your customers buying gift cards, but you as a person, how much money have you saved? What are your personal assets? What's your personal capacity with credit cards? And those things can be done now, whether through Finicity or other platforms, where you can verify personal assets. You can verify so many things about them as a person. And that will now be predictive. Like, could you survive 3 months with no business revenues? Could you survive 6, 12? And that could then in turn impact, okay, you know what? We used to give a 12-month loan to this person. Now it's only 3, because in another COVID type scenario or some other black swan event, I know personally they can float their business for 3 months. But there are ways, like I mentioned with Finicity, where there already is data integrity and it's automated, right? If you're tapping into the Merrill Lynch account, like, it is or it isn't, right, what it says. Whereas with consumer credit and business credit, there are a lot of nuances in how strong is the data, has it been manipulated, how true is it today, even if you're looking at late payments. So I think that's what we'll see, is more like the analogous between tapping into the business checking account and tapping it directly into other types of business assets or other type of consumer assets that historically a lot of small business lenders just haven't looked at and haven't bothered to diligence and include in their underwriting processes.
Thanks. Yeah. I want to remind everyone listening to put questions in the chat if they have them, because we only have about 10 minutes left. So if you have them, ask them now, and we can ask these guys. But Catherine, I want to come back to you. Levi brought up, kind of, I think, the elephant in the room for any company that serves small businesses, which is that this, no matter everything you guys are doing to help small businesses with capital and doing virtual business and all of that, it's just not everyone is going to be able to survive this kind of unprecedented damage. How do you then plan for the future? How are you looking out across the landscape at a potentially different makeup of customers going forward, or is it not as dire as maybe everyone is worried about?
I think part of the challenge is that we lack a crystal ball. So we don't know how long this is going to last. Are there going to be more closings? What's the impact on these businesses? Are there going to be more federal programs that are going to help businesses, continue to make it through if indeed there are more closings? And then once that's passed, and what's consumer confidence going to be like? Are they going to go back to those businesses? Do those businesses even have an opportunity to adapt and do something like go online or sell your food online or whatever type of business it is? I can tell you that a lot. And I see a lot of landscaping and construction and road work. Like there are a ton of, I've used that as an example of businesses that are continuing to thrive and in this environment. And there are those businesses. So to Levi's point about the data is really important. We're seeing cash flow data, and we have other products that our customers can use that expand our view of their performance. And the businesses that are doing really well, we can continue to serve them exactly the way we did before. The businesses that are restarting, we have to figure out how to give them the tools they need to get back up if they stopped operating for a while. Then there are going to be a ton of new businesses. We're going to see more new business starts in 2021 or whatever, I don't know what the year is, but whenever we get to that point, and we need to be there to support those new businesses. Has historically been really good at serving business, especially on the lending side, but even on payments, really good at serving businesses that have a little bit of data, a little bit of history, and it's been harder to serve businesses that are brand new. So I think it's our mandate to figure out how do we support all these brand new businesses that are going to be launching, in over the next 12 to 18 months, in addition to supporting the ones that we're already serving using the data.
Yeah. So the PPP program, even though it's been extended, we have less than a month left of it. I know that's been a big focus for you recently, but what does your lending look like going forward, going post PPP? I know it's changed a bit, even just in the last year as a business, and the PPP has been a wrench in the middle. But how do you, will Cabbage continue lending? Where are you in that industry?
Yeah, I think, of course, we will continue lending in the future. We're fortunate that we don't just have historical data about our customers. We stay connected to the data sources. So I can tell you right now how most of my businesses are performing. So I can target those businesses that are still, surviving and growing and thriving. And I think any business is going to do that. Any of us, any fintechs are going to, focus on the businesses that we think we can support. And then, we're so excited that, we gained a couple of 100,000 new customers through PPP, people that we'd never met before. So we now have an exciting opportunity to bring them into the fold with products that are designed for, different phases of their business life cycle or different needs they may have in running their business. Levi said a lot of folks don't accept payments via credit card, but they may want a charge card, or they may want a different kind of an account to support their business that we can provide to them. So I think it's a matter of having enough tools in your tool belt so to customer where they are.
Yeah. Suneera, I want to give you a chance to address that point too, in terms of, consumers use a credit card, and then maybe that's not an answer for everybody. But at Fat Merchant, how it sounds like you guys are allowed. You have a few different ways of connecting businesses with consumers, but how are you seeing kind of the future post-pandemic world, or post-pandemic, whether it's wave, the second wave, the third wave of this, and what that means for your small business customers, but also just trends in general?
Yeah, no, I exactly. I agree with everything Catherine and Levi have said. And I do think that there are industries that have just they're growing faster than even we can support, right? So I think that there is a huge opportunity there. And like I mentioned earlier, that the businesses my belief is that the businesses that do not adapt to the technology, that do not adapt to the data, that do not want to go online or find other alternative methods, will not survive. Like you're going to see a very, very, very small percentages of those businesses that stick to all the old models. Really, they're not going to make it. And I think that what Catherine talked about, this new wave of there are going to be businesses that are not going to survive this. And that is the reality of this as well. As well as the reality that there's going to be businesses that are going to take massive market share really quickly because they are innovative and they are adapting and they are able to serve their customers better, faster, stronger. So I think for us from like a fintech world, we talked about all the automation and lending. The way that what I view from it is that for Fat Merchant, I want to be their platform of choice. So it doesn't matter how they accept the transaction. I want to be the platform that they accept it through. And I don't need to build everything. And I think this is the power of like all of us coming together. And I want to find all the best partners. So even for us, we didn't get into PPP. We partnered with Womply, was our partner from the PPP side. But it really is, we can all really leverage just automation, but the power of partnership in the fintech world and really bring consolidated data all the way through each of our different networks and platforms to really provide a unified payment fintech experience for the customers, whether that be that I do it through payments or Catherine does it through lending or Levi does it through the credit system. So I do think that there's opportunity to really look at that customer and the growth cycle for them and bring a holistic view from a platform standpoint. And I think that's where it's going to be. But I do think that there are going to be businesses that are not going to make it. And it's fine. That's going to happen. But I think it's really about what the future looks like for payments. And it is digital. It is online. It is on our phones. If we saw the elder consumers adapt to this so quickly, Gen Z is like, this is where the future of payments is. It is Gen Z. I have not seen one Gen Z ever even look up from their cell phone, right? TikTok became the most viral component of pandemic because it was 15-second long videos. So we have to be able to simplify, and there is a new wave of even social media that took place. So I think that that's the future. I think that it's going to be new, and I think that we have to adapt to it.
Yeah. You mentioned an interesting stat at the beginning of this about how 27% of small businesses didn't have a way of doing virtual business during the pandemic.
Yes.
Has that changed? I mean, from your perspective, are you seeing growth in terms of new customers, or how do you, is that changing? And how is, if there is growth, how's that playing out for Fat Merchant?
Yeah, so that statistic was actually not taken that long ago. We did that survey. I think it was a Swipe Simple survey, even that they had done a similar survey, and they are adapting. So that is changing, but it's probably not changing at the speed at which it needs to change. And I think this has been like this weird, like, are things going to open back up? And then now we have re-shutdowns again. So I think that the people that were resistant to change the first time perhaps thought like, okay, things are going to normalize, and things aren't normalizing. And there are new rules, that there is there's a new way of doing business. So I think that they will have to adapt. So I do see that businesses will adapt to more of the virtual payment options. And that was something that we saw very quickly in our portfolio compared to a lot of our payment companies. So first, we actually don't monetize against payments. We're flat subscription. That's what we charge. We charge a SaaS fee for our platform versus from transactional revenue. And so when we saw the massive payment decline, we were actually able to sustain our revenues because we're on a SaaS revenue standpoint. So we didn't feel that effect. Our customers also, we're very lucky that we're in our verticals are different than a lot of the verticals that were hit as well. But really going back to that payment volume trends will change based on it's going to be based on industry types, but people will still, we still have to get our coffees and we still have to go stay at hotels and carry on with our lives. So I think there is going to be a new way. We're still going to spend the money. So I do agree with Levi. We will be coming back as an economy, but just our patterns of how we want to purchase, pay, stay, eat, get our groceries, it has changed.
Yeah, thanks. Well, we are out of time, unfortunately, but thank you all so much for participating. I think what's clear in all this is that small businesses are going to need to adapt. They're going to need to get digital. They're going to have great data. And, it's going to be an interesting, fintech is going to play a huge role going forward. So Thank you all again, and hope to talk to you soon. Thanks for
Thank you, everyone. It was so much
Thanks.
fun.
listening. Thank
Bye.
you.
Bye-bye.
Bye.